Well, bankers are huddling privately in Davos to figure out how to respond to President Obama's regulatory proposals. We partner now with the FT to bring you Lex on Bloomberg. You get a sneak peek of the Financial Times' flagship column a day early. Joining us now is Paul Rathbone from London. So, Paul, what has been bankers' response? We are hearing this word tactics. What are they trying to do while in Davos?
I think that most of their rearguard action in Davos has been conducted sotto voce in back rooms. And really the only banker that's really come out and popped his head above the parapet is Bob Diamond, president of Barclays and head of the UK bank's investment banking unit.
And he said, what did he say?
Yeah, earlier this week he said that the Volcker rule and proposals like it would not, in fact, make the world a safer place financially.
As far as feedback that you're getting, are people saying they agree with him? Do they not agree with him? What's the latest?
Well, I've just been digging into Barclays Capital's numbers, and certainly the numbers seem to suggest otherwise. I was really struck that in 2008, on a balance sheet of £1,300 billion, so of the order of $2 trillion, Barclays Capital generated a return on assets of less than 0.08%. Now, that's pretty poor and perhaps not atypical for an investment bank. And really, the way that an investment bank makes returns, or at least in Barclays Capital's case, is by harvesting a huge balance sheet, $1,300 billion, and then leverage, of course, which in Barcap's case was 60%. 60 times in 2008. Now, perhaps 2008 was a particularly bad year, but the return on assets that Barcaps generated in the boom years was not that much better, 0.3% only. So leverage and the size of the balance sheet really is the way that these investment banks have been generating profits. And I think what's kind of galvanized the politicians is sort of growing realization that bankers are sort of quite content to stand in this stream and capture a large part of it in terms of their compensation. But that doesn't take into account the massive risk that's inherent in their operations by dint of the leverage and the size of the balance sheet.
Paul, we thank you so much. Paul Rathbone joining us there live from London from the FT.